So here we are, guys, at the end of another week. Not a great one for the market. Morgan Stanley had rocky earnings, obviously, and took a beating. Agostino, let's start with you. Ben Bernanke on Capitol Hill this week, twice. What do we hear from him?
Well, we got a double dose of Bernanke this week, and that was pretty good, actually. He's been an expert at managing expectations, and he hasn't really said anything that we don't expect. He essentially kept it very neutral, kept it away from the political bickering as well. But he did suggest that the economy is slowing. He'd recognized that it only grew 2.5% last quarter. It's probably going to grow even less this quarter. He said average job growth was 75,000 over the last couple of months. So this gives us a clue that he's probably thinking about what to do to prop up the economy if it continues to slow as it has been until now. So many major banks, including Nomura and Goldman Sachs, are saying that we're probably going to have more easing coming. So QE3 is probably in the pipeline and it's going to come out at some point.
If QE3 comes, handicap it for us. They have a meeting the end of this month. They have a meeting in September. Anything we see the end of this month, or do you think we wait till September?
It seems to be the consensus that we're going to have to wait a little more, maybe September, maybe early next year. So the situation's not bad enough yet. The threshold hasn't been passed of consensus within the FOMC. There's still differing opinions. But as the economy continues to stagnate, we're probably going to see this threshold approach and be passed.
Right. Hala, whenever we talk about the Fed and we talk about Bernanke, regulation and what goes on with the banks, big part of that. This Libor scandal keeps getting bigger. I think Barclays, when they settled, thought they were first out of the gate and doing a great thing for themselves. Obviously not the case. Now we're hearing that there could be some kind of universal settlement. I know there was a report today on that. What's the scoop there?
Well, we saw Barclays come out, like you said, and I think everyone's kind of taking a lesson and seeing that if you strike out on your own and try to strike a deal here, it's not really going to work out. So what the banks are doing now is apparently trying to get together and strike a global settlement as a group. There's strength in numbers, they believe. So we'll see how that plays out. And
what about for everyone else? Is this a good thing? I mean, regulators have had a hard time with this thing, obviously, so.
I think it would be a big failure for regulators if they were to take up these banks on as a group. I think you do want to separate them and see what they did individually. I think the bigger problem is that we're not seeing these banks strike out on their own and say, I don't want to be part of the settlement, I didn't do anything wrong. The fact that they're getting together and saying, hit us all together at once, rises some suspicion here.
Let's step away from the banks for a minute, Abe, and talk about restaurant stocks, which obviously really hurting today after a rough quarter for Chipotle.
Well, Chipotle is down something like 23% today, and if it closed at that, it'd be its worst single-day performance in history. It reported revenues that were light for the quarter yesterday, and more importantly, the growth definitely seems to be slowing. Sales at established restaurants were only up about 8%, which that's growth, but that's a far cry from the double digits that it was seeing in quarters before this. Part of the problem was they didn't offer any specifics. Management was light on exactly why this is happening. They blamed a global slowdown, and obviously weak job gains and all that definitely have people cutting back, but investors probably would have been more confident if there had actually been a reason connected to it. Moreover, they said that commodity costs are planning on coming up in the coming 6 months, what with the drought in the Midwest. So that leaves other fast casual stocks like Buffalo Wild Wings, Panera Bread. They got slaughtered today. McDonald's, Burger King, Wendy's, those stocks are down today too.
That's great, and the global slowdown thing is so critical. One of the interesting things I was watching today is that despite this global slowdown talk, despite the challenges facing the market, the IPO market is showing signs of life here. We have Palo Alto and Kayak both debut this morning. Both are up very strongly. Five Below, which is a retailer that came out yesterday, was up 50% in its debut. It's clear that sort of the Facebook freeze that we saw after that company went public is over. And as we look out to next week, Facebook is one of the things I'm looking at because they're going to have their first quarterly earnings as a public company. And you can bet people are going to be wondering about their mobile growth, about how the performance has been since they went public in May, with an offering that was clearly flawed, as a lot of people have discussed. So, Agostino, what are you looking at for next week?
Well, on the macro side, the most important number we're going to see is GDP. And while the number itself is not going to necessarily determine anything that in particular, it's not going to push the FOMC into action and Bernanke, it will tell us that the economy is slowing. The expectation is something like 1.3 to 1.5%. It's probably going to be something around like that. There's people saying 1.1. Expect that to get the markets, put it on a sour tone for next week as well.
Hala, on the regulation front, I know you're watching this new Consumer Protection Bureau. What are you looking at there?
Seems to be a summer of regulation here, so I'm definitely going to be paying attention there. There was a report out by the CFPB today, which is Obama's Consumer Protection Agency, that came out of Dodd-Frank, looking at student loan debt. Obviously, that's been a hot issue lately. Student loan debt on the private side has been skyrocketing, and they're just saying they're calling it the new subprime loan. So I think there's something to be watched there.
Abe, McDonald's, is that the big story for us in the space you're looking at next week?
McDonald's definitely to see if the worries that Chipotle told us about are going to be in that stock too. McDonald's has had good U.S. growth, but troubling overseas numbers. And past that, I also want to see if anybody lives up to what Coke did this week. It reported strong growth in the U.S., very great bounds in Asia. I want to see if anyone else in the sector can match that.
Well, speaking of growth, we also have Apple on deck. And, when they come out, people, Apple is a company, this earnings season, we've seen companies have decent earnings to beat expectations, but revenues have been very light. Apple's a company, the analysts expect 30% growth on the top and bottom line year over year. That's pretty impressive. So if we get that, stock's only 5% from an all-time high. Just saying, we could see it again. So
we could see it at 1,000?
I don't know about that, but we might see 644 again before too long. So thanks, guys.